Hey everybody, welcome to Talk About Houses. I'm Todd.
I'm Oana.
And we are going to talk about how to pay off your mortgage early.
Yay.
So, you went out and bought a house because it's a great time to buy a house and you got a 30-year mortgage.
Yes, and your house principal balance is $425,000. It's a really nice house. And you're paying 4% interest.
So, you have decided that either because you got a pay raise or you're getting bonuses or stock options or you got married or something, and you want to pay off the mortgage sooner than 30 years because you don't want to pay it off in 30 years and pay all that interest.
Right.
So we have come up with 7 ways to pay it off early. We're going to teach you these techniques. We're going to go into detail on all of them. You have to watch the whole video to get all 7 of them. And then there's a big surprise at the end.
Oh, I like surprises.
Yeah.
Does it involve chocolate?
Does not involve chocolate. So, the first thing is you have to call your mortgage company.
Right. So you have to call your mortgage company because you have to know the rules of the game. So what does your mortgage look like? So that means, do they allow for you to make additional principal payments? If they do, how often? How are they processed? What are the rules of the game for you making additional principal payments? Are there prepayment penalties? Those are all important questions for you to know the answers to before we get started on paying off your mortgage early.
Yeah, and a lot of those things are in your loan docs, but like most people, you probably didn't read them, and you probably just cared about how much your payment was going to be. That's all anyone cares about is how much their payment's going to be.
Right.
Most mortgages do not have a prepayment penalty, but depending on how long ago you got a mortgage, this could be a mortgage you got 15 years ago, you may want to check that. So
Right.
Who's going to know it is your bank. When you call them, they'll know.
Right.
Okay.
So let's get started. So what's the fastest, easiest way that's probably accessible to all of us is making bi-weekly payments. Now, right now, chances are that you are making mortgage payments once a month. Most people, or at least a lot of people in the US, get paid every 2 weeks, right? So if you get paid every 2 weeks, what about making your mortgage payment every 2 weeks? What does that do to your mortgage payment? So let's kind of figure that out. So right now you're making 12 payments a year, right? Once a month for 12 months, that's a year. But if you make a mortgage payment every 2 weeks to coincide with your paycheck, that's making an actual total of 13 mortgage payments a year. So what does that do to your fund numbers, Todd?
All right, so if you make bi-weekly payments, that means every 2 weeks over the course of a year on your 30-year mortgage, you will pay off the loan up to 8 years early, depending on your interest rate, and you will save about $48,000 in interest on a $425,000 house payment. That's like a ton. 48 grand. You could probably buy a Tesla.
Almost.
You could almost buy a Tesla. You could buy the base Model 3 with nothing added on.
Right.
For $48,000.
So pretty good.
So it's worth a Tesla. Just every time you make that extra, that 2-week payment, just think of the Tesla you're going to get at the end.
Right.
Or just get it now. And then you can use this same principle to pay off the Tesla early.
Well, we can talk about EVs and what that means to your bottom line on another video.
Okay,
right.
So Oana, so the first way to pay off your mortgage early is bi-weekly payments.
That means pay your mortgage every 2 weeks when you get paid. Next.
Okay, what is the second way to pay off your mortgage early?
All right, second way to pay off your mortgage early is make your regular monthly payment and then pick an amount. So for example, on a $425,000 house with 4% interest on a 30-year loan, if you pay an additional $225 each month, that goes towards principal. On top of your regular mortgage payment, you save
5 years. You pay off your mortgage 5 years early. So $225 on each payment gets you to pay off your 30-year loan in 25 years.
Yay!
So you save 5 years of mortgage payments.
Woohoo!
That's a ton of money. You can buy a Tesla with that money. Probably.
I think you have a Tesla obsession.
I have a Tesla obsession.
So Todd, what is the third way we can pay off that mortgage early?
Okay, the third way is at the end of the year, you go to your company Christmas party and your boss whips out a nice bonus check for you. And you're like, wow, what should I do with this money? I could use it to go put a down payment on a Tesla, or I could go ahead and just make another payment on the house. The way this works is, so on your mortgage payment, your amount of your payment is actually two things. It's principal and interest. So when you first start paying off your mortgage at the very beginning, you're paying very little principal. Only about like a quarter of that amount you're paying is actually principal. The rest is interest. So let's say that you have a $1,000 mortgage payment. You're paying $250 a month of that as principal and $750 is interest. So at the end of the year, you go ahead and you write a check for $1,000, you send it in and say, hey, this is a principal only reduction. And then what happens, I basically get you, like you paid off 4 months of your mortgage early.
Right.
Because that $250 gets applied 4 times, you're not paying interest. The thing is that interest is on the end that you're not paying.
Right.
So it's not like you cannot make the next 4 mortgage payments, you still have to make those. But by making a 13th payment at the end of the year, is another way to pay it off early. And then talk to your tax guy, because there may be rules about like prepaying interest and stuff like that for tax purposes.
Right.
Okay, so the fourth way to pay off your mortgage early, Oana, what is it?
Fourth way, 4 quarters. So you make an additional mortgage payment 4 times a year, so quarterly. That means that you are making 4 extra mortgage payments, which saves you a ton. Exactly how much does it save you, Todd?
It saves you 11, I need another finger. 11 years. You pay off your mortgage 11 years early just by making another payment every quarter. So that 30-year mortgage you pay off in 19 years.
Woohoo!
Woo!
Drum roll, please. Number 5.
Okay, the fifth way to make your mortgage payment, pay it off early, is you got that 30-year note, but you're gonna pretend that you got a 15-year mortgage.
Right.
You're gonna pretend you got one. Now, you probably didn't get a 15-year mortgage because your payment was gonna be too high. It's a 15-year mortgage obviously has a higher payment, but what you can do is you can pretend that your 30-year mortgage is a 15-year mortgage. Now, on a $425,000 loan,
right,
it's about $1,100 per month extra that you would have to pay with each loan payment. Now, because you don't have to pay, you have flexibility. You can
right,
just make the normal 30-year payment, or every month you can add in another $1,100 of payment. If you do that, of course, you'll cut the time in half on that 30-year loan. You'll take it from a 30-year loan to a 15-year loan. But what's really cool about this is on that $425,000 house, you paid off not only in 15 years, you can save $164,000 in interest because you're not going to pay 15 extra years of interest.
So in that case, you can get a Tesla and you can get him another one too.
We can get 2 Teslas. We can get 2 decent, not Model S's, but we can get 2 Teslas.
That's right.
Yeah. Okay, the 6th way to pay off your mortgage early is
recasting. So recasting is something that not very many people know about. Everybody knows about refinancing your house, right? But this is a little bit different and a little bit less expensive. So here's the way this game works. Is let's say you got an inheritance, and let's say it's $50,000, and you're 5 years into your mortgage. What you can do is you can go to your lender and say, hey, I want to go ahead and take this $50,000. I want to apply it toward principal on my mortgage, and I want my mortgage recast. So what that means is you will get to keep your loan on its terms, which is the same interest rate, and they will re-amortize your loan with that $50,000 in there. So think of it kind of like if you had put another $50,000 down at the beginning of the loan, right? You would have a lower mortgage payment. Well, same thing applies here. It will lower your mortgage payment. Now that gives you flexibility. It also is substantially less expensive than a refinance. So it's kind of like refinancing, cheaper, easier. You get to keep your fabulous interest rate. You get to lower your mortgage payment, and now you again have flexibility. You can still go back to the other strategies we talked about, making additional principal payments, however you want to deal with it. But it's a great way to lower your mortgage payment, pay off your mortgage early.
I like it.
Okay.
Okay.
So number 7, our last one, winner, winner, chicken dinner.
The 7th way to pay off your mortgage early is to pay it off.
Pay it off.
You pay it off.
Yes.
And it's pretty easy. You just call your bank. They're used to this. And you say, I want a payoff amount.
Now the payoff amount is different than the balance, okay? Most people don't quite understand the difference. So the payoff amount is what it takes to pay your loan off, which is higher than the balance. Because remember, you pay interest in the rear. So when you make your mortgage payment on the 1st of January, you're actually paying the interest for December. So that's why your payoff amount is higher. Your payoff is also only good for a certain amount of time, so pay attention to that. Usually it's about 10 days or 14 days. So they need to receive your payment within that time frame in order for that payoff amount to be valid.
But fortunately for you, we have a whole other video entitled, What Happens When You Finish Paying Off Your Mortgage?
Right.
And I'll put that in the comments. You can go to that, you can watch that video, and it explains the whole process. Okay, so paying off your mortgage early takes a little bit of discipline. And there are some people who will say, hey, why are you paying off your mortgage early? It's only 4% or whatever. But there's nothing better than knowing when you walk through the door of your house or your condo or whatever that you own it, that you don't have a mortgage payment.
Right.
And hopefully this video gave you some tips that help you save some real money so you could go out and buy a real Tesla.
Okay.
Okay?
All right, sounds good.
All right. So thanks for watching, and please subscribe to our videos.